And welcome, my dear friends. Welcome back, our dear viewers. Today, the long-awaited days of the PMY. Not Y, PMI. Today we got the PMIs, my dear friends, the macros, and we're going to see if our 100% success rate continues today. Right, so we actually had 100% success rate with macro statistics for about 2 months. And in the past 2 months, I think we had only 2 days with technical analysis where we did go into a slight red. Yesterday was one of them. I think like last month there was another one. So overall, you and I are doing very good with regards to expanding on how to make binary options part of your financial independence. This is an amazing instrument. Pocket Option is the platform to go to. The link is below. So if you click there, you will see the graph identical to what I do right now live. This isn't pre-recorded, and this actually has, on some level, the difficulty part about, opening positions. I mean, I don't want these streams to be boring, obviously. So sometimes we go into opening positions when there is maybe a good reason to wait. But I mean, if you just look at my pretty face, pretty mask, for about 20 minutes without any kind of action, obviously this is not really going to be the good thing. But anyways, let's kind of hop right to it. Chats are open. My boy Donald, my boy Henry are reaching out to me on the daily basis in the Telegram channel, which is also listed below. You're welcome to do that. You're actually encouraged to do that, to talk to me one-on-one. I get, this great pleasure in clarifying these instruments for anybody who is considering improving their financial independence. As I mentioned, this is a great instrument to make money anywhere. I mean, if there's internet on the moon, you're able to make some money there too. All right. So, anyways, let's kind of hop to this. All right. So we've got. Let me refresh the page so you can see. There we go. It's my time zone. And there we go. In 7 minutes, the second largest economy from Europe is going to be releasing their manufacturing and services PMI. What the hell is a PMI? When you click on any kind of economical calendar or forex calendar, should have a little clarification ability and basically purchasing managers index, purchasing managers. All right, so any company, big company that provides a manufacturing some sort of good or providing some sort of service, there is a purchasing manager in there that pretty much, what do we say? Well, okay, he buys raw materials for you to be able to present your services or your goods to the people, right? So if there is a demand for that service or for that product, I mean, obviously there's going to be, a certain amount of raw materials purchased to present that to the customer. So if, I don't know, we're providing these kick-ass, these shirts, right? And you usually provide, you usually produce about 500,000, I don't know, per day or per week. If all of a sudden everybody starts buying these shirts, there's going to be an increase in demand from the producer, right? So all of a sudden you say, hey, 500,000 per week is not enough now. Man, people are loving these shirts. They saw it on Morpheus. It looks so sexy and stylish that, we're going to need to provide 1.5 million this week, right? Or for the following week. So they're going to order more material, all right, to be able to produce this, product. So this is essentially what, kind of also gauges a bit of inflation, right? So it is a leading economic or a leading indicator in economic health. Businesses react quickly to market conditions, right? So if there is demand, if people are spending their money, you're going to feel it as a business and you're going to, also order more and, kind of this. So they're gauging this today, and today we got, I mean, man, this has been a long-awaited day because of 4th of July. And it's actually kind of not really scary, but it is interesting enough how America is impacting the rest of the world. Because of the Friday, first Friday of the month, which is the NFP month, um, because it was on the 4th of July, everything got shifted, right? So NFP, which is usually on Friday, got shifted to Thursday. CPI, which is usually on Wednesday the following week, got shifted to the following week after that to be at the same time with Canada. This wasn't really a good thing because I'd love to have taken advantage of United States CPI on Wednesday and Canadian CPI on Tuesday the 15th, right? So Wednesday the 9th and Canadian CPI, but because, they were mushed together, we did make money. We made money on the USD, but we also saw that, Canada also moved the market enough. CPIs, British CPI, we made money, or no, we didn't make money, but we made money with the PPI, but CPI for British, they moved the market as well very noticeably. You can take a look past, into the history on pocket option. You'll see that macros are, they're great in the fact that you don't need to do any technical analysis. Right now, if you're mowing the lawn and your watch and, like notified you, hey, there's going to be the release right now. You can stop your lawnmower right now. I don't know if you're in America and, got a day off. Whip out your phone, and in 3 minutes and 20 seconds from now, you're going to expect a spike, and then there's going to be a retracement. All right, we've been doing this for such a long time, for months now, on a daily basis. If there is a macro statistic, we usually take advantage of it. And the wonderful thing about the PMIs is that there's a hell of a lot of them, usually released at the same day. So French flash manufacturing PMI and services PMIs are going to be done right now. In 15 minutes after, we're going to have German, which is the first economy in the Eurozone. Then about an hour later, we're going to finish, after doing some technical analysis and things like that, we're going to take advantage of the GBP, and at that point, I'm going to, cut our stream short, but we're not short, but we're going to end our stream. Chats are open, my dear friends. If you come across this stream just accidentally, randomly, because certain maybe recommendations, make this into a dialogue, right? Ask me a question about this, about the hell, I don't know, the weather here, about anything that's on your mind. You can ask a question, and right now we're going to go back to the platform, and we're going to take a look at something. Now, here's the, kind of sucky thing. We're going to remove, yesterday we talked about momentum, right? We see that, there's a zero line, it's a histogram. Usually this is the kind of thing that I love to see. If we, kind of go a little bit into technical analysis, we saw that there was a very, very nice resistance level right there. Once it broke through, we had this, many, many signals that it's a good idea to buy after the breakout, but we also see that there's not really, right here was a kind of decent thing, but the momentum, the oomph of this move is not really that strong. So, but that's something that we're going to come back to between our macro results. All right, so here's the thing that makes me a little bit displeased, I guess. We got 50% on euro dollar right now. So, as wonderful platform as Pocket Option is, we just need to be aware of such things. So let's take a look if we got anything. There we go, Euro CHF. All right, so that's good enough for me. Euro CHF, and this is what we need to keep in mind. We're not doing pending trades. At the end of this minute, right, on 30 plus seconds, we should be able to, we should see a reaction, right, to the macro. So we got 88%, and I'm not expecting like a 20-30 pip movement, maybe 10-15 pips. So if we're talking about 93.27, okay, 93.27, this candle was 93.28. This candle is like a pip, right? So it's not really big. Anyways, let's see. It should be noticeable. There should be a spike in 3, 2, 1, boom. All right, it looks like it could be. All right, I got stuff frozen. What's going on? No, no, no. It looks like it's the platform. Is it me? My internet. No. Or what's going? There we go. There we go. It's kind of unusual behavior. All right. So it seems like there is like aggressive jerking, but I'm not. I'm not seeing the what we usually see. Hold on a second. Unless there's something weird going on. All right. 48, 48. All right. So slightly lower. And exactly as the forecast, all right, maybe it's not really some staggering news. So we're not really going to take, maybe I'll take a position right here, I guess, for retracement. No, not really something that maybe that's moving people to be opening positions. Maybe the statistic is not, oh my God, it dropped to 36%. Are you kidding me? All right, what's going on? What's going on? All right, Euro CAD. 81%. There was the spike. All right, wow, that's something that's super, super sucky. It was 88% with Euro CHF, and it dropped significantly. Wow. Um, well, we did see a spike, though I gotta say that I'm like flabbergasted that in the middle of this position we got a super, super huge drop in payout. And I'll explain that in a second. All right. So anyways, actually it worked. I mean, the signal is here, right? Actually, you know what? Let me make a screenshot of this. 1 second, and put that in our Telegram. Uh-huh. All right, wait. We got tech. There we go. We're back. All right. Short technical issue with the voice for some reason. But I was saying that French manufacturing is usually, because it's the second largest economy in the Eurozone, it's naturally to think that the movement is going to be a little bit less than the German, right? Very industrious, very, kind of country that, usually produces lots of, good quality cars. Anyway, so we're looking at, well, we're going to wait a little bit and we're going to take advantage of the German manufacturer. Oh, the PMIs. Okay, wait, I got one of my. There we go. Crypto. Oh God, I don't remember his name, but there's Nick in YouTube, Crypto Master or something, right? He's here with us in the Telegram channel. One moment. Da 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 da. All right. Telling him. Okay. Hello. Yeah, and about, yeah, he's saying that he missed the French. 9 men, we are good to go with German PMI. There we go. Yeah, so he's about to hop in here. All right, so our community starts to get bigger. Be part of this, my dear friends. I mean, I understand that today it's a little bit early, right? Actually, for Kryptonaut, he is from Texas right now. It's 2 o'clock, actually 2:30 or so in the morning. And so you might be you might be hopping in here as well. Um, there we go. All right, so this is what we. Oh man, what? Oh no, that's Euro CAD. Seriously, I mean Euro's dropping across the board. Euro USD. All right, 81%. Yeah, man, we need to be vigilant. Euro GBP. Let's actually kind of put these up again, right? So as well. Euro dollar 81% right now. We got Euro GBP at 71. So we're gonna stick here just in case we need a retrade, kind of a bigger second step martingale. All right, so going back to 100. All right, and right now I think we just with the $36 profit. It's as I mentioned, it's really unusual that it would drop that low. But I think that we've made back our slight negative dip yesterday. So second time in like 2 month period, we went into a slight red with technical analysis. There we go. 7 minutes to German flash and services manufacturing PMI. Yesterday, you guys, we were discussing momentum indicator, which is a trending indicator. Really, it kind of shows, well, not really trending it shows if the trend is strong enough. So if you get alligator and momentum and you are able to set support and resistance levels and you see that there is a breakout in effect, and you see that the momentum showing you big bars, you're able to continue to buy, and every single minute, for example, right? There's that kind of approach. But yesterday the market was fickle. I guess it was more like flat market. It didn't really show us many, trending moves, and that's why we had a little dip in the profitability. So our first position here, we probably went back into zero. But right now, in a couple of minutes, in like what 6 minutes from now, we should be able to see another reaction from euro in the real market, right? We're looking at euro dollar. It's got 81%. We got $100 as a starting point. And this is what I love about the macros, as I keep saying. I'm gonna like remove this. This is just depressing. All right, let's hopefully it sticks. It stays. There we go. It's up to 84%. It has mostly to do with volume, right? So I'm going to take this very quick moment to generally explain. So there are 3 parties, so to speak, between, for us to trade when we trade. There is the buyers and sellers, and then there's pocket option. Ah, my boy Kryptonaut, how you doing, brother man? All right, time to learn, my bro. All right, so there's 3 entities, right? So there's buyers and sellers and pocket option, right? So me, you are the clients, Then there's the pocket option that's kind of brings us together, right? So they're kind of in the middle. There's buyers, there's sellers, and there's this flow of, essentially opening positions for up and down. So when somebody buys, when somebody has to win, somebody has to lose. The losing that we do is 100%. The winning that we do is never, it's not going to be higher than 92%. And if there are more losses, then the losses are covering the wins of the other clients. However, if there are more wins, where does the money come from, right? What if everybody, all of the pocket option platform people buy? Where does the profit come from? It comes from the third entity. It's a financial institution that takes on the risk when such disbalance happens. It's called market makers. So when there are more losses than wins, they get to keep a particular commission. So that's how they earn money. However, if there are more wins than losses, they're the ones that cover that difference. All right, and so they're also the ones that analyze the market, and they're saying, hey, right now there's going to be something really, really obvious, right? So when there's going to be like a really huge thing, I don't know, Yellowstone exploded, right? The biggest volcano, I think, in the world. It exploded. Naturally, the dollar will go down. And when you go on the platform, you'll see in the real market, maybe there's going to be the payout that's going to be very small, like 30%, like there was today with the CH something, right? Whatever that currency pair, the first one that we did. So this is why you will see a fluctuation in the payout depending on what kind of market conditions there are and also the volume. If all of a sudden there's like 5 people trading here, yeah, there's not going to be really a big payout, or so there's this disbalance could be very vast. But the more people, the more stable it should be. The more volatility. It's kind of all of these things, they impact the payout. So, anyways, German manufacturing and services PMIs should be bigger than the French based on the size of the economy, but it's still not going to be something like 40, 50 pip movement like what we usually expect on the NFP, which means that, again, we're not going to do pending trades because, look, see, in euro dollar, one second, at 10:15, where was this? Was it here? There it is. This candle right here. That's not very big, right? So we went down, it kind of retraced, and that's it. And if we do very quick calculation, one second, right? 1763, 1766, all right? 66, yeah. So 3 pip movement. Now, if we done 4 pip pending trades, we wouldn't even come out of this. It wouldn't activate. It would not have activated either of the positions. All right, so 1 minute and 25 seconds. So now we can essentially stop hopping back and forth. In 20 seconds, this candle will close, and on the following candle closure, there should be again a reaction. There should be a spike and a retracement. And the low payout is something that affects the multiplier in your martingale. So if you lose, if we, in our situation, if we lost $100, right, we would have had to open a position for $300 to just make back the difference, right? Just a little bit more, about 300, right? 280 at $36 in profit for every $100 means that you would have had to open like close to $300 just to break even. But the risk of losing $300 is, outweighs the possible profit. So that's why we're usually looking for something with bigger payouts. So there we go. We got $100 loaded. We got the timer loaded. All right, 84%. And in 20 seconds from now, there we go. We see already a little bit of spiking, jerking motion, a little bit of volatility. There it is. German manufacturing in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and Where'd it go? There we go. We also not a very big one. Man, I really wish that it would be bigger. What the hell? I mean, I don't even want to open a retracement right now. It seems like it's like not doing its thing. It seems like it's already bigger than or about the same actually. All right, let's open a position for retracement. But this is really lackluster. This is why it's never a guarantee. That's why I always say, my dear friends, please, 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 please do not like bet the farm on this. All right, so let's kind of hang back a little bit. There was a spike. It seems like it was marginally bigger than it seems like it was marginally bigger than the French manufacturer. There we go. Maybe I'll open this one for 200. And the third step martingale, I'll hang back and just keep it here. All right, there we go. And so there was a spike, there was a retracement till the end of the candle, but it seems like there is a continuation, right? So let's we'll see what's going on. I'm gonna lose 100 bucks on this one. All right, but it seems like I might be winning. I might be winning the 200. Hold on. Alright, so let's just hang back a little bit more. It seems like once again, maybe my internet is a little iffy right now. It seems like it's not reacting as smoothly as it should. So spike, retracement. Alright, we'll open another retracement right now if I'll open another retracement for 600 bucks, right? We got 84% payout. It's still, there we go. We got it's not good, right? It's marginally worse with manufacturing, and it's marginally better than with services. So, but Germany is not really a service country. I think it's more about products. So let's see. Retracement always happens, but this is why we do the martingale steps very cautiously as well. So the next one is for essentially 1,000 or 1,800, but I got a limit here for 1K. So just in case I'd never really exceed that. But spike, there was retracement in the first minute, but because we do it with a timer, and it took quite a long time to get to this point, right? I think I opened 100 bucks like somewhere right here. It took a while. It took like 40 seconds, 20, 30 seconds to get to this point. And when I opened for a retracement, it carried over into the following minute and it was actually lower. So, but anyway, spike, there was a retracement on the third minute, right? And this is why, again, we do what we do. We don't rush into things. Hopefully, we're still learning from this. So the spike retracement happened. It continued a little bit, but there is that retracement here as well. So kind of similar than what it did here. There was a spike, a bit of a retracement, and on the following minute, it continued to drop and it closed again here, carrying into the third minute. So almost a duplicate of what's happening here, right? So a downward movement, retracement, but if it carried here for, like 30, 40 seconds later, or into this movement to that point, and when you open the retracement with a timer, it will carry into the next minute, right? Imagine opening a position for retracement here, and but you did it 40 seconds in, or let's say 20 seconds into the start of this candle. You're opening a minute timer, and that means in 20 seconds this candle closes here, but 40 seconds later it's at this point, right? So 60 seconds from the entry point right here, it's here. Even though there was a retracement, we missed it based on the expiration. So you could theoretically do the end of the minute kind of thing, right? With the zeros at the end of the minute. But I found, and once again, this is something that you can test yourself, but I found that timer works a little bit better for me. But you can see that even within the candle, within the end of the candle, so you can open 20 seconds into it right here, and it closes, right? It kind of pulls back, and at the end of the candle, you would have been in the money here, right? If you open the position, but again, it has to be kind of calculated and looked through to find out what you're feeling comfortable with. The spike and the carry over into the following minute or towards the end of that candle. So it's got its pluses and minuses. All right, Kryptonaut. All right, yeah, I didn't get in this session. I will wait for the other one in 30 minutes. Yeah, wait, not in 30 minutes, brother. Wait a second. So in 30 minutes, right, at 11 o'clock, if we look through the time, if we activate medium impact events, we should see today, Thursday, right, at 11 European. Right, European flash, once again, manufacturing services PMI, but for the entire Eurozone, it's diluted data. It's diluted data. What, based on what? Based on the fact that we do have strongest economies like Germany and France. Yeah, in 1 hour with Britain, it's going to be better. But we also, in Eurozone, just to explain to anybody who might be watching this later, Eurozone doesn't have only strong economies. It's got weak economies as well. So we got the strong ones like Germany and France. We also got weak ones like Greece. All right, which is part of Eurozone. I've been to Greece. Lovely people. Lifestyle is very, very slow there, man. Once I was waiting for like a shower, like a burrito. Wait, what do they call it? They go to gyro, right? I was waiting gyro for 20 minutes, and I was the only person in that in that store. So 20 minutes just for a gyro, and I just found out that the lifestyle, the tempo of life is very, very smooth and slow and carefree and kind of thing. But maybe that's not really something that in comparison to the German work. Fast, go, work, efficient, forward. It's a little bit different. And anyways, in the growth of the economy, that might be, disbalance with that. So anyways, that's why Eurozone for the manufacturing services PMIs, it averages the data of all of the countries in there. That's why it's diluted. It's not something as impactful because some countries are doing really good, other countries are doing kind of crappy. And, but we also kind of, if we take a look at the statistics, it was negative, right? To euro versus dollar, we saw negative French services, even though it was like marginally, but it was still kind of bigger than the previous candles, right? Maybe not even here, but previous like 15 minutes or so, this was the biggest candle. Then the German, which was also usually like 10, if this is like 10, 12 pip candles, this is usually like, I'd say like 10, 17, like 15, 17 pip move. Today, it's ridiculously tiny, 1767, and the drop to the lowest approximately 1763, so 4 pips, right? Where German was like 2 pips, right? Was it 2 pips? 63 and 66. So yeah, this was 3 pips in German, was 4 pips today. Kind of redonkulous. Usually it's above 10, but we could also maybe see the reason why. It's not as clear-cut data, right? Previous month was 48.1. They were expecting 48.5. Came out at 48.4. Well, it's not so terrible, really. I mean, it was marginally worse than expected. But on the other hand, the services was in the 49.6, expected 49.7, and it came out at 49.7. So I don't know, is this something that really is an indication if the economy is expanding drastically or lower, or, I don't know, contracting or something? So it's, I don't know. German, same thing, right? 49.0, expected 49.4, marginally bad in terms of, production, manufacturing, right? 49.7, expected a little bit bigger, and came out a little bit bigger. So, but this isn't really something that was maybe setting a clear tone of, hey, this is great, everything is awesome, or hey, not so good, so sell. That's why there was Germany, as I mentioned, some more about manufacturing goods. instead of services. I don't really think that there are any call centers in Germany on an international level for this kind of services that they provide. They usually provide goods. That's why a slight negative reaction or statistic sent the euro into a bit of a downward movement and a retracement after. So right now, yeah, we're Cryptonaut said that yeah in 1 hour, brother, man. I know that it's like wicked early or late on how you're looking at this. So hope you got like a strong cup of coffee or it's an energy drink or something. And actually, yeah, let's take a look at. 1 second, I want to send a screenshot so we. Yeah, it seems like we got some sort of goofy situation with the voice. But yeah, I made so just made the point that we went into the red with technical analysis twice in the past 2 months, and one of them was yesterday. So today with the macro statistics, we totally came out of the red zone, and so we're good. We're again making money. This is what I'm trying to tell you, my dear friends, is that do not expect that every single day you'll be in profit. Just like you're not really expecting that every single trade will be in profit. For some reason, that doesn't extend to your daily performance. So you're usually subconsciously are expecting that it's not going to be passed on to your performance-wise. It's not going to be 100%, not 90, not 80, not 70 even sometimes, right? You understand that's okay. You're still going to be in profit. But with regards to your daily profitability or daily progress, for some reason people still think that every single day they have to be in profit. You have to know when to stop so that it's easier to get that back. Right? And percentage of success should determine the percentage of your investment. Right? Super, super important. Investment has to be uh, calculated based on your statistics. This is what I keep saying: logic, math, statistics. It's logical application of math to your statistics that you get. If you get 50-50, my dear friends, it's enough. You are going to be making money. It's 1 out of 2 trades in the green. That's usually good enough with proper money management. So if yesterday I took the 5th-step martingale, the 6th-step martingale, chances are I would have been in profit. I would have gotten that. But that's the risk that we don't want to take because it's not guaranteed. On the other hand, what we saw right now with the macro statistics, it's something that's expected, something that has historical relevance with regards to how it performs. There's usually a spike, there's usually a retracement, and yes, usually it's like 10, 15 pip movement or 15, 20 pip movement from Germany. Today we had some sort of really goofy thing, and again we're coming back to, Alex, why didn't you open it for $1,000? You got 40K on the balance. That's why, because I can't guarantee that it's going to be 10, 15 pips, even though it usually is. All right? I usually, if you look through the past videos, you usually see that I'm correct when I say, hey, we, you know what, NFP usually like 40, 50 pips, and it comes out at like 40, 50, 55, 47, 30, whatever. So we get an idea. Because I've been doing this for such a long time, I have kind of an idea. And I got to tell you that in the past, you could have, I mean, past would be probably 2017, 2018. I saw on average that NFP was moving at like 80, 100 pips. Different times, different spending, different kind of, things. And you were usually able to, right, to expect like an 80, 100 pips, sometimes even more movement from the NFP. But after the global, geopolitical kind of development with the war in Ukraine, with the how it affected, relations with Russia. Russia, is a major, kind of exporter of cheap gas, of oil, of right. So this was actually what hurt Germany, quite heavily. Is that why Mercedes left Germany? Because it's very expensive to produce, right? A car that was usually, let's say, budget came out to $30,000 to produce with the previous conditions. Now with the higher gas expenses that were fueling all of the factories, probably including Mercedes, now the budget is like 70,000 to produce that car, which means the markup by the time it gets to the stores is going to be so expensive that nobody's going to want to buy it. All right, that's why they're moving out. That's why they're producing it in China, I think, first, and now they're building a, kind of gigafactory in the United States to make the production balance with the salaries of people that can probably, buy these cars. So, anyways, this is something that's, important to keep in mind, that times change, and throughout the years, reaction to these macros could be altered a little bit. Now, where I was usually telling to my customers and clients, thousands of clients that I talk to, hey, 80, 100 pips. Now I say, hey, 40 to 50, sometimes a little bit more, 60. I think this month was like 62 or 63 something pips. All right. Let's actually take a look. I'm kind of curious now myself, right? 1 second. So we're going to take a 5 minute, right? And I remember telling you guys that this was on the 3rd of July, right? I think this was somewhere here, right? Is this 3rd of the, 1 second, we can remove something. No, that's 11th, all right? So it's the previous week. There we go. There it is, right? There's that beautiful thing, right? So there it is. Euro dollar. The pip is the 4th digit after the decimal. We're looking at 1786 to 1717, right? So 86, 80. So, oh, wow, wait a second. So, man, I'm kind of 86 minus 17. My math is a little off. 69 pips, right? That's actually, quite a bit larger than the previous month and the month before that and the month before that. So that's why we usually would take a pending trades here, because 4 pip, the size was probably here and here. So when it, spiked down and retraced, this is why actually I do the retracement into the following minute. I know it's a 5 minute expiration, but believe me, this was something very, very similar. Spiked down, retraced, maybe spike, continued to go downward a little bit, and then continue to retrace. So this is 10 minutes worth of data. And it looks a little bit different with 1 minute candles, but not by that much. All right, so something to keep in mind. Phew. Okay, so we've got the European. Okay, so French and German PMIs. So in 11, so in approximately 10 minutes, we're gonna notice this, right? We're gonna be around, because if it was slightly lower for the two biggest economies in the Eurozone, what are the chances that medium economies, or kind of weak economies, I would say, medium economies, I would say, so strong, well, yeah, I guess medium and weak economies are going to be doing so much better to offset the difference, right? So if we seen a good reaction from, very strong reaction from Germany, strong reaction from France, um, we could have anticipated that the other countries, even if they're not, they're not usually doing that well, that they're not going to offset that difference into a positive direction. So it could have been diluted, it's like more water than sugar, right? But because we're adding, negative, or, kind of like mix match a little bit, but some more on the negative side information for the strongest economies like Germany and France, what are the chances that they will be overshadowed by the other ones if they were doing so good? What if Greece all of a sudden came up, I don't know, some sort of weird thing where just started outpouring, the GDP rising, employment rising, everything, spending, everything is, boiling in that country. And they, could they bump up this particular mix match slightly negative data from the two strongest economies? See what I'm saying? It's like that seesaw, right? If these guys are doing so, not so good or kind of iffy, what are the chances that on this side it's going to be so good that they're going to be boosting boosting these guys upwards, right? That is going to boost the euro up. So I would say that we should see in like 10 minutes or a little bit less than that, euro maybe go down still as a reaction to this medium impact event. Also have the similar reaction to German and France manufacturing and services PMIs. Um, Cryptonaut, my dear man, remind us, I don't know, we did talk about it. Why is GBP considered the most volatile of all currencies? Yeah, it seems like there's, yeah, he wrote, okay, can't hear me. Yeah, there seems like a goofy thing with my mic, but yeah, quickly, my team is reacting to this pretty good. All right, da-da-da-da. All right, so we're still live. We're live for about, almost an hour. All right. Yeah, yeah. So to anybody who's yeah, Cryptonaut is one of the one of my good buddies now. We're from Texas, right? So we got people all over the world. I encourage you to share your thoughts, ideas. Maybe kind of recommend maybe somebody to watch these videos. Maybe make this into a dialogue, a little bit more interesting streams when we're talking to people. But if you're not really quite maybe in a position to type very quickly or get in here and ask your questions, Telegram is listed below. You can send me voice messages. I do talk in a few languages, right? So we're maybe not Spanish. Yo quiero Taco Bell is probably the only thing that I know. But yeah, so anybody that speaks English, I mean, obviously you are more than welcome to drop me written text, or what makes Telegram very convenient is that you're able to just to push the button, say, hey, Morpheus, what's going on? And, got a question about this, that, your input. And certainly I would love to, clarify any questions that deal with in the, kind of secondary income or even kind of switching into primary, but it has to be done right. You know what? I told Cryptonaut as well that this, as wonderful as binary options is, it does not replace traditional investing, right? So it's something that should be in addition, right? So you got your daily job, you do your thing, and look, right? With just macro statistics, you're able to put like five, six, $700, depending on your balance, of course, into your pocket on the day, on the monthly basis, and start saving that, right? Or $500, of profit today. If you leave that money, don't take it out. It means that on the following month, it could actually roll over and bring you to like a couple of thousand. If you leave that in there for like a quarter and you roll it over, we're talking about like 10, 15K, maybe in a couple of months with a moderate balance to start with. All right, and at that point you'd be like, hey, you know what? In a quarter, boom, you bang out like a particular credit. right? Or in like a quarter and 4 or 5 months, you could actually get enough money for first down payment on the property that's next to you and rent it out. And the money is going to start coming in, or equity start building. All right, so you diversify, right? No billionaire, millionaire did this thing where they deposited all of their money, their blood, sweat, tears, spit, whatever, cat, house, car, into one thing. And then as soon as it went up, they took out all of their money and stuffed it in their mattress. They're diversifying bonds, futures, even crypto, real estate, collectibles, right? Whatever floats your boat. But this is, very important aspect of proper investment. So if you're passionate about making money work for you instead of you for the money, Telegram channel is open for absolutely every single one of you. Let's catch up. Let's become buddies. Actually, I think that I don't have clients. I have friends all over the world who are burning with the passion for the same things that I do, right? Money working for you instead of you for the money. So I love the fact that me and my family are citizens of the world. We can live wherever the hell we want, and at any given moment, we're, got money pouring in because I got real estate all over the world as well. It's rented, this is not the only balance, that I don't live on this 40K. It's just here to grow because my money or my daily needs are coming from my other investments, right? That's why I don't care if I don't make $1,000 today. I don't have to do that. And that's what I'm hoping to get across to every single one of you. So we talk about this quite often enough where, we get this across. All right, now Kryptonaut is not really writing. Maybe maybe he fell asleep. It is freaking early as hell where he's at in Texas right now, like 3 o'clock, 2:30 o'clock in the morning. Anyways, but British economy. Also, when you're looking at these, when you're looking at the macros, you got to understand what kind of country, what kind of currency, and what kind of economy that is. Right, so if we actually take a look, wait a second, if we go to investing.com, right, and we take a look at economic calendar, earnings calendar deals with stocks. Economic calendar deals with, the macros that we did. Now, if we go into filters, right, we see crapload of countries that their currency is not even on pocket option. I mean, you like Ecuadorian, Chilean, or something, Luxembourg. I don't know. Maybe that's wait a second. Maybe that's some of these are European, euros. But I don't know, Sri Lanka, right? I'm not really sure if anybody is watching from Sri Lanka. What kind of currency do you have there? Or Tanzania, Tunisia. So these countries are not really global players. Um, and when they release statistics, would anybody be interested in them? Right? So this is something that we need to kind of keep in mind that when we look at our platform, when we're looking at the macro statistics, we need to kind of filter out what country does have an impact on the world, where what do they do to impact the world, and how do they maintain their economy. So when we take a look, when we think about Britain, right, the GBP, Great British Pound, what do they produce, what do they export, how do they impact the world? And so you immediately think of like luxury cars like Rolls Royce or Bentley. That's not really sales in the millions. It's exclusive cars, right? It's not something that can be afforded by everybody. And that's why we understand that the economy cannot be supported by that. What else do they do? If you take a look, they, might come across the, notion that all of the jets, or so I would say majority of the jets that you use to fly between countries, within your country, the jet engines are, could be produced in Britain. I think that's what they do. They produce and service jet engines. And because we have 33 seconds or 30 seconds, there we go, to, take advantage, we're going to notice I'm probably not going to, maybe, I don't know, maybe a 50. Because I don't expect there to actually be a reaction, but it could be. All right, so let's take a look and then I'll finish my thought about Britain. All right, so 10, 9, 8, 7, 6, 5, 4, 3, 2, and let's see, is there anything? Oh, that's a 5 minute. Whoa, 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 whoa. Let's go back to 1. All right, there we go. And well, I don't think so. I mean, it's there is a little jerking, right? It's a little volatility. I don't know if it. All right, let's open for. Oh, wait a second. Oh man, you see that I was showing you this and I screwed up. All right, let's. I'll open a 50 here and let's go for 100. Let's see if this is something that's gonna pan out anyway. All right, so we can see there. Where was this? This was the French. This was the German. And this was, and for some reason it is positive. That's the interesting thing. Let's take a look. It's still pending. There we go. All right, so 49.5, 49.7 came out 49.8 for the manufacturing. 50, 50 point, 50.5, 50.6 came out of 51.2. Hey, all right, not too shabby, not too bad. So there was a bit of a positive reaction, and I don't know. I don't think that this is enough oomph to continue to go upwards for a while. That's why it played out over here. And again, so it's, by the size of this candle, right? Would you be able to, if you didn't know that there was a macro right now, by the size of this candle, would you consider that this was a reaction to some sort of statistic? Probably not, because there's ones over here that are bigger than the reaction to the statistic. So this is why it's also important. So we made money here, but I would not have expected, um, something stellar.
There we go. Um, all right, so wait, hold on, let me put this in. Okay. No, as I mentioned, if usually this is like, 10, 15, this is like 15, 20, this is usually like 5, right? Or something like that. 5, maybe 10 if the statistics are shocking. The best case scenario for this was what? 17. Wait, hold on. Where's my curve? Again, we lost.
And again, we lost, something, I'm going to talk to my tech team about this. Again, lost the feed. So I'm not sure when we lost it, but check it out. If we expect about 10 to 15 from German, 15 to 20 from, or I'm sorry, from France, 15 to 20 from German, I would expect like 5, 7 from the European. So the best case scenario we're looking at here is 1761. The best case scenario is 1763. That's a 2 pip movement, right? So not really that much bigger, or usually France does, like, as I mentioned, much bigger, and German bigger still. So we got 3, we got 4, we got 2. So in this case, the ratio of this. Right, and right now we need to be patient a little bit, maybe talk more about this, specifically. Um, but British GBP, PMI is considered, I would actually say that it could move the market even bigger than the German and the French. Um, mhm. All right. A little update from my team and my friends here. Yeah, okay, good. So Germany, I'm sorry, Germany, British. What do they produce? Right, we talked about Rolls Royces, but that's an exclusive kind of car. It's not something that's sold like a Toyota Corolla. on the global level in the hundreds of thousands, right? I think like for the entire history of cars, if it would equal like 100K or 200,000 probably would be already an impressive statistic. Jet engines, right? So yes, I mean this is something, but can the entire economy be sustained by luxury automotives and jet engines? Probably not. So what Britain has, what Britain, probably sustains its economy on, it's the banks, right? The SWIFT system. So if China wants to buy hundreds of millions of barrels of oil from United Arabs or something, right? From the Middle East, they have to send money to, for that through the, wire transfers because it's big, big amounts. It's not something that's done I don't know, somehow, by the phone and a promise. It's sent through the banks that usually are in Britain, and they get to keep their commissions. Obviously, that amount of money is not is small, and if they get to keep commission like 1% or 2% or half a percent, it's something that's absolutely massive when we're talking about the global scope of this money movement that was happening. Now with different technologies, now that the world is including cryptocurrencies, now we need to be aware that it's not the only way, and they can bypass these commissions, and China can stop selling for like it did in the past. It can stop selling its currency to buy the dollars because the oil is used to be from 1970s from the Middle East was bought in dollars. All right, so anytime you sell, you devalue. Anytime you buy, you strengthen. The strength of dollar was within that agreement that all of the oil from 1970s is going to be bought in dollars. And anyway, so right now the fact is that China can buy from UAE, from the Emirates or from Middle East, with cryptocurrency. It's now more acceptable, though maybe not replacing the traditional money movement. It was actually one of the things that the United States could use as leverage to bend maybe their partners to their will, saying that, hey, we're going to sanction you. You're not going to be able to use the SWIFT system. So if you can't move money, like Iran, right? They couldn't move. Iran has very, very cheap oil, but they can't really export, send it anywhere because the money is not really exchanging hands. How are they going to do that? So now with whether it's military or sanctions, with the new instruments like cryptocurrencies, it's making certain things, impacting the geopolitical arena. So anyway, something worth keeping in mind. All right, so, and the reason why GBP is considered the most volatile of all currencies, it's because essentially all of the eggs are in one basket, right? So how does British economy, how does GBP maintain its value, or maintain its strength? How, what do they export? How do they make money? And the fact is that new technologies are very much threatening the old ways of security or old security, right? And this is where if nobody's moving money through British banks, they're not making commissions. All right, so something worth, also kind of a food for thought for later. All right, and we got spammers in Twitch. Um, my team is gonna take this out. 1 second, just want to mention that there. Yeah, we're streaming live right now to two platforms, to Twitch and to YouTube at the same time. Uh, One moment. There we go. Uh, yeah, coming back to what I say. So it's considered to be most volatile, which means it can change. What is volatility? Ability to change price very, very quickly by large amount, right? By large distance. So this is where we kind of also be aware that if you want to gauge how the market is, how this particular macro is reacting in the market, you would want to put it against a very, very sedate cryptocurrency. Like, all right, if anybody answers right now, Cryptonaut, you included, I don't know, I'll throw $10 worth of TRX into your account. What is the least volatile of all currencies, and why? All right, let's give it, just a quick second for somebody to gather their thoughts. Um, I know Donald and Henry, Donald and Henry, you guys are excluded from this. The reason is that we talk about this constantly with these guys in Telegram channel. You and I are able to discuss and clarify all of the aspects of making money work for you, individualized to your specific situation. When I ask somebody from India to, wait a second, I couldn't ask for somebody from India to establish a budget for $10,000 in their pocket option account because it's a lot of money. This is, in certain places, and I know like in Russia, in India, you are able to live very comfortably, I might say, on like $500 a month. That's including rent, that's including food, the internet, and a few outings with your friends in certain social situations, right? So if your goal is to make like $20, $30 a week, all right, as a side income, it's a significantly different approach than if you have $10,000 and your goal is to make, I don't know, $500 a day. All right, so in Telegram channel, you and I can discuss specific things because I lived all over the world, and I'm going to continue to visit new places. Asian continent, we could say that, is still in my, in Middle East is something that I'm still, very, very eager to transition to, but I have a newborn. I have a 6 month old that needs to wait a little bit. So, Kryptonite, that's okay, buddy, but I'll say then, if the GBP is considered the most volatile of all currencies, JPY is considered the least. It is forbidden on the government level to show volatility, right? Not in favor and not opposed to this currency. So JPY is not going to show you whoosh, like, I don't know, 100 pip movements in like, a bit, unless something, like Fukushima or Fukushima, all right, whatever, the nuclear reactor thing that happened there, right? So, or some sort of natural disaster or something. But even at that point, it's still going to be dropping maybe a little bit faster than usual. But it's not something that's going to be like whoosh and devalue completely, because it has status of a safe haven asset. All right, status of safe haven asset. So if you take a look, historically speaking, maybe on Yahoo Finance or some other platforms, like on Google, whatever, you will be able to see that in 2020, when COVID was in effect, all of the currencies were falling very, very rapidly, but JPY was falling, but with like a parachute, right? So it was falling much slower. Because while the rich are trying to figure out what's going on, get more information, they're going to move their currency or their money, their investments into somewhere where it's considered to be safe. Gold, JPY, oil, and as it happened because, the evolution of technology and everything, cryptocurrencies. Right? If you take a look, actually, cryptocurrency came out of the coma that it was in. It was very lackluster since 2017, the end of 2017, where yours truly lost $4,000 or 4,000 euros. I was living in Europe at the time. Um, During the unexplainable jump from 5,000 to 20, and equally unexplainable drop down to 6,000, all within like 3 weeks. All right, so after that, people lost trust into this, and it wasn't really active until 2020, until essentially 2 years later, when all of the currencies, all of the investments were under risk because of the virus that told, you from the government level to say, stay at home, don't go to work, don't come outside even, stay at home. If you stay at home, you're not going to be spending money if you're not having a money coming in. And that's what is still has an effect on Europe as well, plus other geopolitical situations like the Ukraine, Russia thing as well. It's impacting. So it has an effect. But if you take a look that in 2020 everything was falling and cryptocurrencies was rising, because where did the rich are going to put their money in, right? During situations like this, and this is why oil was rising, gold was rising, Bitcoin was rising, and cryptocurrencies in general. This is what saved Bitcoin. And then at that point, right now, we have governments have Bitcoin reserve. Uh, Major investment banks have Bitcoin reserves because this is something that balances the risk of some sort of weird situation where you're still going to have buying power. And I would say that Bitcoin has more liquidity than gold, right? If you have Bitcoin on your phone, you can go to the market and a grandma can have another phone with a crypto account and you can say, Grandma, sell me some tomatoes. Here's some Bitcoin. If you got a gold bar and you go to the market, how are you going to pay for that? A gold bar is going to have significantly higher value than a bag of tomatoes. What are you going to do? Shave off a few gold shavings? How are you going to? Anyways, so it's more liquid. It's user friendly. It's more user friendly. That's what I'm trying to say. So, anyways, a little bit of kind of general understanding of what's going on with regards to how the countries are getting their value. It's by their exports. If you're exporting more than importing, you got great GDP. It usually means that your goods are in demand, that you're self-sufficient, and this is things. So geopolitical pressure, this and that partnership between countries, that's on the political level. I'm not staying in that too much. Just kind of get just enough to understand, what my macros mean and, how I can make money with whatever is developing. So GBP is considered the most volatile of all currencies because, we can kind of conclude that all of their eggs are in one basket. And if nobody wants that basket, no, what are you going to do? It's going to devalue the currency. But if all of a sudden there's going to be a massive money movement between GBP banks, or Great British banks, right? And yeah, the economy is going to expand a little bit. So, but that's not something that's a steady revolution. I don't know, steady circulation, perhaps. That's why it's considered most volatile. JPY is considered to be. It has a safe haven status, safe haven asset. Status, and that's why it's the least volatile. So coming back, if you want to know how many pips can this particular macro event generate, I would encourage to put that currency with a JPY because JPY being not the volatile of all least volatile of all currencies is not going to dilute the data from that macro. Euro dollar has a very, very, it is 40% of all of the trading in the world. From all of the trading in the world, around 40% of that is done in euro dollar. All right, so exports, money exchange, things, services, goods, and so German cars and French submarines or something. It's being moved money between euros and the allies or the NATO, whatever. It's moved either in dollars or in euros, right? And they overlap with regards to the time zones. So for about 4 hours the European session is still active, while the American session is just is coming to an end. But American session is already active for 4 hours, so they overlap for 4 hours. The volatility during that time is directly piped through the activities of both countries, right? So if there's going to be a macro statistic for the dollar, if there's going to be a macro statistic for the dollar, we need to also be aware that there could be something happening on the euro side that could dilute this data. And there's 4 hours while they're overlapping. So you're looking at the macro statistic and you're like, woohoo, it's awesome, and you're buying the dollar. something at the same time could have happened that pushed a bunch of people to be, I don't know, buying the euro at the same time, which means the woohoo statistic for the dollar is now resists like that seesaw, right? You added more weight on the other side, which means you're not going to be jumping right on that scale. You're not going to be getting as big a movement if it was the same, right? So you got an ounce stone here, and you're putting a pound, right? I don't know if I'm actually, just bigger stone on the other side. Technically, there should be a whoosh, a big move, right? A big kind of drop. But if at the time that you're putting on this bigger stone, this one increases as well, there's not going to be a big move, right? So this is where currency pairs, when somebody asks me, Alex, what kind of currency pair I should pick for the PMIs? Is it euro dollar, euro GBP, euro, for this kind of thing, I say pick the one that gives you the most money, right? The higher profitability means the multiplier in the following step of martingale is going to be actually bringing you money back and into profit. If we done the thing with the CHF, I think, right, or whatever it was, is the first currency. What was that actually? Let's go back in there. We would have had to use multiplier of 3 just to be able to Euro CHF, yeah, 3 just to be able to almost go into zero. But that's a huge risk, right? That's a huge risk. That's why we don't want that. Such low profitability. Thankfully, we won on that one, right? Even though it was a tiny, tiny ass movement from the French, spike and retracement. So we made money, thankfully. But yeah, so in euro, dollar, USD, it was much different situation. If I lost $100, I would have made for every $100 $84, so 168. So I would have made back $100 and still been in $68 in profit with a $200 investment versus the situation here. All right. And let's take a look. I think we're coming up to that time, right? With what the hell is the time right now? Yeah, so 9 minutes right now left to the British Manufacturing Services PMI. And after we take advantage of that, I'm going to say adieu and goodbye for today. Until tomorrow, we're going to do technical analysis trading. There we go, 8 minutes from now. But we do have main refinances rate. Oh, wait a second. All right, this is actually kind of important. Refinance rate. What is this? This is the central bank decision whether to raise, lower, or keep the interests in the banks the same. So if there's going to be a higher interest rate than 2.15, if it's going to come out of like a 2.25 or 2.30, which is usually weird because they usually increase it by 0.25% instead of 0.15. But nevertheless, for the eurozone, this is important. If you raise interest rates, people within the countries or within the eurozone are not going to be as eager to go to the bank and borrow money. So it constricts the economy if they raise interest rates, which is good on an international level because people are going to be in, I don't know, Russia, in America. They're going to be like, whoa, they're making more interest in their banks than I do here. If in America, let's say, for example, it's like 1.5% for you to keep money in the banks, you get from the bank, and inflation is a little bit, it's around there as well. You're actually going to be tempted to sell the dollar and buy the euro if this is going to be twice as much. It's going to be 3% instead of 1.5. So when you exchange, you're selling dollars, you devalue that, you're buying euros, you're upraising that. So international level is increased when the interest rates rise, and it constricts the economy a little bit from expanding, allowing the salaries to catch up to the inflation. So if this is something that's worth watching, right? It might actually create a bigger movement than the PMIs because that has a much more global impact on the economy. And we also have retail sales from Canada, right? United States showed us we were able to make a couple of $1,000 that day. This month on the retail sales from America. It was the third most popular statistic from United States. From Canada, also, it could move the market, but on the global level, who cares about the markup of Canadian retail stores? Right? They're not the biggest consumer country in the world. It's still, something that's left to the Americans. And unemployment claims at 330 for United States. It's a weekly statistic. It doesn't usually impact the market on a great, level. You might see like 2, 3 pip, very quick volatility, unless the statistic is shocking. But the beautiful thing about today is that we got manufacturing services PMIs at 445 from the States, the biggest economy in the world. So, Kryptonaut, I hope that maybe you will get enough sleep right now and be up enough to take advantage of this as well. Spike, retracement, two-step martingale in the first minute. Wait for the third one to see if it doesn't come through in profit, to see if the retracement is going to happen on the following minute or the minute after. There's that. And ECB press conference. ECB is European Central Bank. ECB, European Central Bank conference. It means usually that there's going to be a press there, and the press can ask questions that are not scripted, right? So the answers to these questions, because of the interest rate decision that's going to be at 3:15, at wait a second, no, not 3:15. Yeah, 3:15. Press conference half an hour later at 3:45 is also worthy of your attention because there has to be an explanation, right? If they're going to keep the interest rate the same, some of the guys in the in the press are going to say, "Where are we going with this?" Right? We've been keeping. Let's take a look. Wait a second. Is there history here? Yeah, we kept it. We kept lowering it, right, since December 2024. There we go. We could say there we go from December 2024, maybe even earlier, right? So we have 4.5. They keep lowering interest rates in hope. Why would they lower interest rates? If raising interest rates leads to constriction of the economy, lowering interest rates leads to the desire to push people within the country to start borrowing money from the economy. Oh, I'm sorry, they're borrowing money from the banks to spend. If they spend their money, they're going to stimulate the economy and it's going to start raising the inflation. Right, so if they keep, so today, at 3:45, the press conference is going to say, "Hey, man, we've been like lowering the crap out of our percentages, keep lowering, 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 but maybe it's, not a lot of people are seeing this as a good reason to actually go and borrow money from banks to start spending a lot. When you borrow $1 million, you're not going to spend $10 on a candy and just hold on to that and pay interest. You're going to usually borrow $1 million to invest into a business, to invest into. So there might be some questions as to where does the Eurozone going? And if the answers from the ECB president, Christine Lagarde, I believe she's still the head honcho, if she's going to answer somehow, that's not really something that is going to, I don't know, boost confidence, and euro might be dropping. Or on the other hand, she says, "Hey, you know what? This is last time we're dropping, interest rates because statistics that we monitor over a long period of time show that we're just right about to start bouncing, upwards, and we're going to start increasing interest rates in like 3, 4 months." That's great news, and the euro should be gaining aggressively, right, significantly. So we got 1 minute and 38 seconds from now. We're going to take a look at anything with a GBP. Oh, it would be nice if I typed it, right? GBP. And the highest paid out is GBP AUD. There it is. Let's highlight it. And let's, just in case, highlight GBP CAD. All right, so we're still going to be here. We're not doing, notice no indicators. And I'm going to keep it at $100. And in 7 seconds, we're entering the final countdown, the minute. There we go. In 59 or whatever seconds now, we're going to have a reaction to the GBP against Australia. Australian dollar, we got 86% so far. That sounds pretty good to me. And again, no need to plan for this, very even right now. Kryptonaut can go to sleep, hopefully get some sleep, and in like 5, 6 hours, wherever the hell, actually, no, a little bit more, right? So like at 4:45, it's 11:30, so 11:12, 1, 2, 3, 4, 5. Oh God, 5 hours later, there is that thing where you don't have to be awake and very, very, very conscious for long. It's about a minute, two reaction and go back to sleep. All right, we got timer, we got loaded 100, 5, 4, 3, 2, 1. What do we got? Whoa, drop, there's 100. Let me load up two. All right, so there was a gap, right? There was, what's called slippage. There was such a volatility. There's actually news that I would say that very, very bad news for, well, not very bad, but bad enough where lots of orders were placed to sell. All right, and we opened for a retracement at a good point. Let's see what we got. Pending, 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 pending. Let's go back and see if we, don't want to miss, the second step if we need to, second step martingale. But yeah, this was kind of fast. The fact that it opened with a gap, it usually means lots of orders were opened for a sell. So much that the market is not linear. It doesn't go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, or 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. So there we go. We made our money, and let's take a look. All right, so it's still pending. Look, a minute later, it's still pending. So it is bad. Services are bad. 52.8, 52.8 was scheduled, came out at 51.2. So, yeah, it came out like 1.6 in the negative, right? And all right, the fact is that this is still pending. Hold on, what's going on? That's the weird manufacturing PMI. Again, what does Britain manufacture? Not a whole lot. All right, so this was actually good, right? 78.9 came out at 70 or 40. See, I got like dyslexia here today. 47.9 came out of 48.2. So we had in manufacturing slightly better, right? So they were expecting a 0.2%, zero point 0.2 improvement, and it came out at zero point 0.3 higher than the forecast. But this was for 1 point, whatever, something lower, 1.6 lower than the forecast. So this is where we had a drop, we had a retracement, there was a bit of a continuation. That's it, it's over. We've made our money, people. All right, so money. What did we make today, by the way? Let's take a look. So 36, right here we had 200, right? 300 we lost, we won 500. So 236, 200 and whatever, let's round out, 270. So 350 bucks. 350 bucks in a matter of hour and a half of sitting in front of a computer talking about pleasant, dropping some knowledge, talking about some interesting, aspects of why and what to consider and how to take advantage and why is this important enough. So, my dear friends, right now I'm going to let you go. Take a look at the USD manufacturing services PMIs. Share some screenshots in Telegram channel if you get an opportunity of your activity in this. Ask questions if you got any. You want to make money, investment is a great way to, once again, to make money work for you instead of you for the money. Talk to me about all sorts of different directions. I've been doing this for such a long time. I love what I do, and I want to share it with you, my friends. So, thank you. Wait, let me make sure that my big pretty face mask is visible. I will see you guys tomorrow with some more technical analysis and explanation about different indicators. Once again, thank you so much for joining, our money making session today, and I will see you guys tomorrow.